What is going on, FUD Nation? Today we have a very, very special episode featuring none other than Mike McGlone over at Bloomberg. Now, if you don't know Mike, we've done several episodes before, which I encourage you to check out. He is one of the top analysts over at Bloomberg HQ, focusing on commodities and precious metals, dating all the way back to the 80s, and he famously called the top in 2017, and he also called the descending market all the way throughout 2018. He's got some very interesting, very unique, and quite positive news to share with you about Bitcoin as we come into the end of 2019. I really enjoyed this episode. It is packed with value, so I think you all will enjoy it too. If you're excited, do me a favor, smash the like on this video and get ready for an amazing conversation with Mike over at Bloomberg. Welcome back to the show, Mike McGlone over at Bloomberg HQ. How's everything going, Mike?
It's all good, Elio. It's good to speak to you again. As we spoke to earlier, you haven't seen me a lot, but I see you all the time as I watch your FUD Nation program. Appreciate that.
I appreciate you following the channel. Thank you very much. So it's been, as I was saying right before we started recording, we've actually been doing these segments now for over a year. So much has happened in the market. It's been a while since we chatted, and I'm really, really excited to hear what your take is on all of this madness going on in the Bitcoin world. So, I don't want to draw out the introductions too much. I want to hand the mic over to you. What are you seeing over here? What's going on?
I think the first thing I like to think of the word is a word my kids taught me is the word meh. Compared to last year, spelled M-E-H. I'm going to share my screen with you in a little bit. We'll get there. And that is in a good way. I mean that in a good way. It's like we spoke earlier about compared to last year, obviously it's completely different. I think we're in a bull market. And it's not really, let's start with Bitcoin. Less of a bull market, more of a bear market retracement, meaning things will get exciting when we break out above last year's highs. And I did say when. The question is that might take much longer, and I think a lot of people hope or expect. It might take more like years. But we'll see. I mean, at least for now, we're, I think, in a good space. I sense from a fundamental standpoint, we're seeing more, plenty of I would say responsive buyers interested on lower prices, but also we have responsive sellers, from the hangover from the 2017 rally, parabolic rally on rallies. So to me, that's ideal. Is kind of our prediction this year. We'd go into a lower volatility environment, notably in Bitcoin would become more like digital gold. And everything I see is happening, i.e. Bitcoin is up at 120% or so this year. Bloomberg Galaxy Crypto Index representing kind of the rest of the market is up a lot less, maybe 40%. If I click on my screen, I can see that, but I don't want to distort my other one. Yeah, it's going to distort it. So I think it's happening, but now, we're pressuring back a little bit of that support level near 8,000. This question is how we respond, and it's probably better if I shut up and see where we want to go on this.
No. Your job today is certainly not to shut up. So I obviously didn't do a long drawn out introduction, but you famously predicted the top of 2017, and you were not shorting because you're not actively trading in the market, but you were predicting, calling for lower price action throughout the entirety of the 2018 bear market, and even as we started to run into the ultimate lows, you were still seeing even potential lower prices there. So hearing you say that you see future highs and not if but when is to me very encouraging, because I know that there's by no means could you call yourself a permabull or anything like that. You're very indifferent to the movements of the market. So I'm very curious as to obviously I think Bitcoin's up a little more than 140% or 120% because it's close to a 3x. I believe the ultimate lows were about 3,100. But yeah, I'll turn it back over to you. Let me know what you're seeing. What is spelling out the bullish scenario, and then of course, how are you indicating or how are you deriving some kind of time estimate?
Well, I think I'm in an ideal position being completely objective, and having been an ex-trader and having made a lot and lost a lot of money, I've learned some of the lessons the hard way. And that's the way I look at most markets. It's ideal not being overwhelmed with the position because it's going to bias you. And we know that with a lot of our viewers need to look back at themselves and say, okay, if I'm bullish, is it because I want profits and I'm greedy? If I'm bearish, if I'm short, it's just have to, I'm completely objective and neutral. One of the key things I'm showing the chart right now that really kept me bearish last year was addresses used. I use a 30-day average from Coinmetrics. That's in like this little aqua line. That was the number that really, once it broke above the November highs in March, that was an indication, okay, something's going on. Right now, addresses used are pretty stable around equivalent of Bitcoin around 9,000. I'm showing on the right hand of the chart. If you can see that, if it's big enough.
Very interesting.
And also what's important is that magenta line, that's the 52-week average of Bitcoin. It's, I always, one thing as a strategist, you always have to define the trend and act accordingly. So I see that's one, you can't really argue with a 52-week average. It's basically, it's simplistic, but standard. It's trending higher, comes in around 7,000. Now we have to expect we could get back to around 7,000, 6,000, and that's where I see a layer of responsive buyers and support. But what scares me is this, on this chart, is this really is the orange line, and that is transactions, a 10-day average of transactions from Coinmetrics. It's hovering around levels around 7,000. It's got the highest correlation with Bitcoin that I've found, and I'm open to you or any of your viewers who can find something that's better and more robust with a higher R-squared history. And it's, it's really good spurt. You can see earlier in the year it just spurted higher, and now it's saying, okay, caution. We should be careful and cautious. But overall, I see now that's kind of the more, on-chain indicators. I'd like to really focus somewhat on the, that's some of the day trading stuff that, I won't react to and some people do. I like to focus on some of the bigger picture, and that is, where's gold? I mean, to me, Bitcoin is now the equivalent of gold, and that's what I'm showing here. Bitcoin, I'll show you a little bit, the beta of Bitcoin, the relationship between gold in Bitcoin is the highest ever, if you measure on a 200-day basis, which makes sense to me as we're entering this macroeconomic environment. And that's what I'm showing you here, and it's just a monthly chart. Bitcoin in white, that's log normal, and then gold in gold, and they're both having a good year, and as they should with the environment. We discussed this earlier in previous conversations with, the rest of the world's easing rates aggressively. So is the U.S. We have a little bit increase in stock market volatility, in the macroeconomic environment, I think highly favors quasi currencies, and the world's premier is gold, and I think Bitcoin is becoming the next most widely adopted quasi currency for the future.
Well, I mean, first of all, unpacking what you just dropped on this, which is a lot of information. I think the correlation between the transactions and the actual price of Bitcoin, it seems uncanny. I actually kind of want to follow up later and actually pose to the audience, if you guys can find anything with a higher R-squared value and a higher correlation, maybe I'll try to find some prize for you guys, like some FUD Nation merchandise. I'll send it to you if you guys can bring an indicator to the table. That'll be a running competition. But on the gold comment, I really think that that's the best case scenario for Bitcoin, is to resemble gold, and of course, you could say that the ultimate goal is multi-million-dollar Bitcoin, but I think that most Bitcoiners would be extremely happy with Bitcoin resembling gold from a market cap standpoint, and that gradually eating away at that market cap would be a tremendously positive situation for Bitcoin, and it doesn't require any technological improvements to be decentralized gold. It does that job already.
Key point, as long as it doesn't screw up, and I don't think it will, it's there. It's already won that race. I mean, it's almost 70% of all cryptos. It's first. It's the most adopted, kind of like Tether. As much as you might hate it or love it, it won. It won the stablecoin. Bitcoin has won the unique independent quasi-currency role, and everybody knows in the world, if you want depth, you want to be able to store your value, you want to buy something that's going to have limited value, and it potentially might be like gold. Bitcoin's the one to go to. As we are speaking, I just want to pull in one other chart here. I mentioned this is on the bottom line real quick, just to show you what I mean by becoming digital gold. This is just a measure of the beta. Beta is how much the market on the bottom, how much did Bitcoin in white will trade on a daily basis versus gold. This measure is 1.2 times. That's just 200 days. That means on average, when gold's up 1%, Bitcoin's up 1.2%. Now it's imperfect,
Gotcha.
but key point is from the chart, it's the highest ever.
Gotcha.
Versus gold, and that's what we expect to continue. And again, I think it's early days. That one of the things I want to bring out is, we're focusing on Bitcoin, but I have to focus on Bitcoin because to me, there's a major difference between Bitcoin and the rest of the market, and that's what I'm showing on this chart now. And that is, In orange, now this is just since this year. In orange, you have the Bloomberg Galaxy Crypto Index, and that's the one we helped, created with Mike Novogratz.
Mm-hmm.
I have better hair than he has. If you guys have seen him, I'm sure he's great. But no.
Shout out to Mike Novogratz. If you want to come on the show, we'd like to have you on as well.
Oh, we'd love to have. We might be able to arrange it because I'm teasing with Mike. We should do a rich Mike, poor Mike analysis of. I'm definitely the poor Mike.
Hey, well, if you want to bring on the Novo, anytime we'd have you guys on. You have a little rich Mike, poor Mike. That would be an amazing piece of content.
We can. Hey, let's try that.
All right,
so the chart
good.
I'm showing now is in orange. That's the Bloomberg Galaxy Crypto Index. It's the top 10, and it's limited to 30% Bitcoin. Now, any type of proper index, you can't really have one entity being too much, and that's why it is. But there you analyze the problem with, I think, the broad market is. And part of my focus, when I really was digging in a couple of years ago, I would focus on all the other, whatever I thought was driving the market. And that's what a strategist is supposed to do. And now, to me, everything other than Bitcoin's a 10, and everything's probably, even Ethereum and XRP, there's all like 4s or below at scale 1 to 10. And here I show the chart. You see 200-day moving average is turning up. Bitcoin's in white. And here in the orange is the Bloomberg Galaxy Crypto Index, and it's only going up reluctantly when Bitcoin goes up. And what I like to show on the left-hand side, this is something I used to watch a lot in the trading pitch. This is called a normal distribution of price. It's classic binomial. It's a classic distribution of just normalization statistics, and it's showing. Here we started out lower this year, and we've built the volume in this area, which is an indication that market is good between 8,000 and 10,000. At some point, it should creep that higher, and it shouldn't get much below down here. This is really broke through around 6,000 early now. I don't want to see too much trading below that level, but I expect to see responsive buyers if we see those levels.
Yeah, it would certainly be a dagger if we were to retrace those lows. I've seen other analyses that those lows corresponded to other sort of infighting going on in the crypto community. There was a Bitcoin Cash war at that moment, and hopefully that was anomalous, and that was the ultimate lows. I think sinking below that $6,500 mark would spell out pretty god awful things for Bitcoin, at least for the medium term.
Yeah, and that's one thing I always try to focus on is be careful focusing on letting your attention be drawn to the trees and focus on the forest. And unless you're a day trader, fine, trade those trees, but I focus on the forest. And that's one thing I always try to do is what's the bigger picture forest? And one of the key flips for me this year was when the systematic risk of Tether basically declined to, when Tether turned around after this, and I guess it was subpoena or something, or the New York Attorney General came after him. After Tether turned around from that and said, no, we're fine, we don't really care. That's when I said, fine, if market doesn't care, if Tether's good at 4 billion market cap and continue to appreciate, then that means prices are going up. So it's just that adoption, those kind of indicators I'm always looking for.
Well, something you might enjoy, which you might already know, is and circling back to what you said is Tether is something that people really dislike within the crypto community, but me coming from a development and a product standpoint, they are the first mover. They occupy the space, and all other stable coins are not even second. They're not even they're not even in the consideration compared to the billions in power and the usage, the actual everyday usage. I heard a statistic, and I haven't vetted it, but I heard a statistic that Tether is the #1 means of transporting money between China and Russia, and that the traders that are sending it back and forth between China and Russia do not care if it's fully backed, and that they just use it because it works. And so when you have that kind of effect, it's kind of hard to stop. It's pretty hard to stop something that's just simply working that well.
Exactly. And to me, that's also a key indicator. That and Libra are indicators that to have something that's a currency or call a currency and to have it fluctuate wildly, no one's going to really use it as a currency unless they know it's going to go down, then they'll get out of it. You need something stable like Tether. And potentially Libra. And to me, that's indicative of most of the rest of the cryptos. Because they're not gold, they're not the one that's adopted as a store value, they're just waffling. And they should continue to waffle because they're not currencies, they're just highly speculative digital assets. Now, that's kind of an extreme, but that's where I keep differentiating towards Bitcoin. And what you mentioned, Tether's been adopted. It's won so far. It could fail, but so far it's won, and Bitcoin is the number one.
Yeah, I'm a big believer that things are worth what they're worth to the people that it's worth something to, and it seems pretty silly to say it like that, but there are plenty of examples of situations where these assets have value to people, but it's up to the developers to really focus on providing that value as quickly and as upfront as possible. And some people have been successful, like if you look at Binance, but they started with a simple product, made that product big, and then because of that, people wanted to get discounts with using their product, and so they buy their tokens. But I think on the whole, you're absolutely right, and hopefully there's a future era of crypto where most of those coins actually do hold that value.
Well, yeah, we can move on a little bit. I was just thinking, as I can just show my recent update on Tether, and that's related to the market. You can see the increasing. I just look at it as an objective strategist. In orange, you see that increasing market cap. I get it.
Yep.
If the whole crypto, any other crypto looked like that, you'd say, okay, that's succeeding, and it's stabilizing. Then you look at in white the broad market, as mentioned by Bloomberg Galaxy Index, and then what's kind of following along Tether's way is Bitcoin. That's what I have in aqua there.
Well, that's amazing. Obviously, there's been a lot of speculation as to the relationship between Tether and Bitcoin's price. There's probably not nearly as much correlation as some people would like to believe, but I think there is something there that as Tether grows, we've seen higher and higher Bitcoin prices. So,
yeah.
Well, that's amazing stuff. I mean, I'm really interested to see these correlations that we don't get to see on a lot of charts. We usually see these same old price charts, different kinds of fractals and Elliott waves and stuff on the same old charts. So it's really interesting to see these other metrics that you're using. With transactions, on-chain addresses, these types of metrics and how they correlate to the overall, which you could argue are actual fundamental factors.
Well, go ahead.
Yeah.
Since you mentioned, I want to bring in one more, but I'll let you finish.
Well, that was what I was going to ask. Are there any other ones that you're seeing? And I really enjoy when you bring this stuff to the audience.
Well, that's kind of my key thing. I want to focus on what the market's not. I'm always wondering what matters the most. What can I use as the best indicator for the market, and maybe what your average person might not be aware of. So one thing is futures. Not everybody's aware of futures, but that's definitely my background. So I started in the trading pits in the 80s in Chicago, and so to me, futures were the significant signal back, and we all knew 2017, the peak. When I got called to do radio 2 Sunday nights in a row, I'm like, all right, talk about a bell ringing at the peak. That's a bit of a sign. And of course, all the indicators were there. But now you see what I show you as futures in orange. That's called aggregate open interest. That's just a total open interest in futures, basically going from lower left to upper right. But the significance is we've just recently had a dip back down. Open interest is basically at the halfway mark, and it should continue to appreciate. One thing that this is CME futures. The CME is going to trade options last year, which is what I used to trade in the trading pits, options and all the treasuries. And when you add options, that usually massively increases volume. You can't add options unless you have sufficient enough volume, and at some point that open interest should increase. So this to me is indicative of institutional demand and adult supervision space, meaning one thing it should guarantee is volatility should continue to decline. One thing I'm a bit worried about is if you look at white, that's the 30-day average of volume. Now it's dropped a lot. We had that peak earlier. Volume peaked a little bit before price, even though it's a 30-day average and it's lagging. But overall, this should continue to pick up. I will start to get worried if these numbers don't pick up from these support levels. It really should increase. I expect it to, but something to keep on my radar and keep on watching. I look at it as these kind of 50% retracements to support, like price, are indications of good price levels, relatively good support in price.
Yeah, and I think you're absolutely right. And open interest is something that my buddy Crown talks a lot about, and it becomes that kind of rocket fuel. When you do have that open interest, it can propel the market in various directions with the right set of circumstances. And I think that's what you saw earlier in 2019 with a lot of open interest on shorts, which allowed for the price to really to have that kind of dynamic upward trend. You had said before that the market has to get really short before you can actually have a dynamic upward movement. So yeah, the future is the fact that most people looking for profits or sophisticated traders in the market are no longer looking for altcoin pumps, but they're looking for Bitcoin futures with leverage. I think that is really the trend that has changed from the last bull cycle to what will be future bullish cycles. It will be focused mostly on Bitcoin in the high 90%, and then there will be a trickle off into these other assets until they've been proven to be on the same level.
Yeah, it's good. Well, that was one of the signals. I got to admit, I certainly did not pick the bottom, but once it started trickling up, and we had record levels of shorts, and that's part of them. It's such a new space. It's really trying to figure out how to properly measure it is what I'm working on. But we did have record levels of shorts, and that was a good indication. Okay, all right, market's done and oversold. Now I just haven't. I've looked at it, but it hasn't been giving me good signals lately.
Yeah, I think you're absolutely right, and I think that it's the how young it is, especially the options side of things. It presents a lot of opportunities for really sophisticated traders who know that these things are being mispriced. They can exploit those opportunities that even market makers aren't. They don't know how to necessarily price these options and how to, it's very much a young space. So if you're ahead of the curve and you're really sophisticated with trading options, I think it's an incredibly interesting time to be in Bitcoin. And I see that as really the future of the industry largely. I wouldn't be surprised if the vast majority of the industry is done on options and futures in the not too distant future.
Well, the classic sell them the shovels scenario really probably saw me smiling when you're saying that. Is I came to New York to be an over-the-counter options market maker in U.S. Treasuries, and I'd bid and offer options in U.S. Treasury, but there was no volatility, so there was no spread. I view this space from the guys who are willing to make the shovels, just make the markets, bid the calls, offer the puts, bid everything out, hedge your deltas, and it is an ideal space. And I think that's what's happening. We're seeing a lot of entities getting involved. Futures are helping, giving a place for people to hedge. I used to hedge all my OTC in futures, and that's where it's going. And that's what's happening with an adult supervised market. I was on a panel last week, mostly for investors, but it was a crypto panel with two other lawyers on the panel, which is an indication that adults are coming into space, and it should continue to really support Bitcoin. But it's also getting rid of a lot of the riffraff. And those pumps, they're going to last, they'll last for a little while, but a lot of that is be careful of the manipulation. That's a key positive thing. Once a lot of the CFTC can feel comfortable that the manipulation has been supervised out, all markets have it, then it's more likely to get ETFs, and I think that's just a matter of time. And for instance, like an ETF will help boost the price of Bitcoin as it did the price of gold. But I look at right now, just by looking at volume and futures, it's good. Open interest is good. At some point, you can start with an ETF that just tracks the futures. Yeah, okay, it's a baby step. It's not physical, but we're getting there.
Yeah, I want to dig in a little more to that saying you said about selling them the shovels. I think I think it'll be interesting to hear what you're trying to explain there. And then I do want to ask you a question about sentiment in general, as far as your peers over there at Bloomberg. But can you explain your the sell them the shovels expression?
It's classic from the gold rush. The people who really made the money at gold rush in 1849 in California was the guys who opened the hardware stores and sold shovels at, inflated prices and took in gold to do that. And it's a classic saying I've always been in the business, being on the sell side and the buy side, but plenty of time on the sell side. You just want to give people good information and them to trade with you. By selling shovels, that to me is ideal in Bitcoin. Be careful being the trader. That's okay. I'd say HODL. That's a different story. It's much easier to do that. Certainly something. But by selling shovels, provide the facilities for people who want to trade and get involved. Look at Backed. That's selling a shovel. Fidelity, providing shovels. And any trader, any market maker, OTC option market maker is selling shovels. The problem is I hear there's such a plethora of OTC trading desks now that's getting a bit saturated. But there's still decent volatility. Oh, I'm sorry, there was in the altcoins. But, Bitcoin is just getting arbed out, and it's just stuck between 8,000 and 10,000 for who knows how long.
Yep. All right. Well, thank you for that. I want to ask you now, what is the feeling? What is the sentiment going on over in, you interact with a much more sophisticated, on some ends, potentially more traditional, investors, analysts, sorry. What are the feelings that you're hearing expressed towards this whole Bitcoin or cryptocurrency world? Are people more or less understanding, more or less warm to it than, for instance, 2017, 2018 era?
I'm getting a lot fewer of the extremes that it's just digital monopoly money, and much more the sense I'm getting even here is It's much more an adult market. It's Bitcoin versus everything else. Obviously, some of those are my views, but I reflect what I see. And what I'm hearing from money managers, people are interested. Even money managers are interested in. The standard I'm hearing is, 1% of your total portfolio kind of investable assets. I'm hearing that a lot. What I find significant also is that's here. I mean, we're in the States, and your audience is global, but me sitting in the States. So for us, this is a quasi-currency. It's money. It's a potential investment. But for us, as Wences Cicera says, money is like water to a fish. The rest of the world, most of the rest of the world who don't have the world's stable currency, to me, it's almost a given that you need to diversify that. And Bitcoin allows that, just like you mentioned the tether between Russia and China, and they have more stable currencies, but they're certainly not the world's benchmark. So my sense from money managers is, yes, should be looking to invest some of your portfolio, certainly gold related, into Bitcoin. The rest of the space, I think it's similar to what I view as it's meh. But I'm getting the sense that people are no longer just dismissing it like they did in the past.
Well, thank you for that.
I'm getting the sense it's here to stay, Bitcoin.
Thank you for that. Very, very, as usual, extremely unique and very, very substantial insights into this whole market. What do you think we should look forward to? Best case scenario, what kind of metrics should we look to perform over the next sort of 3 months, 6 months? And worst case scenario, what are those two different, green flag, red flag scenarios that we should be looking at for the next 3 to 6 months?
I think best case scenario is kind of 12,000 in Bitcoin. Let's just focus on Bitcoin and upside. And I show that here. 10,000 is pretty solid. That peak near 14, that's kind of your standard pop after enthusiastic pop. I don't see us getting much below 6,000, 7,000. I don't think we should. I'd get kind of worried if we sustained back below 7,000. And it could happen. I mean, I have to be objective. And you never know. But I think overall, by the end of the year, market's going to more migrate towards $10,000. But we'll see. I mean, I have to take it a day at a time. I'm worried, as I showed you earlier, transactions are going down, but addresses are okay. Those are more shorter term. And the key thing also, macro, is I've been bullish on gold for like 3-4 years. It's finally breaking out, and I have to look at those macro in very similar ways as I do gold. So we need this situation in gold to continue, which I'm showing on this chart, and that would be for Bitcoin the big problem. But overall, quite still positive, and I think the market's doing one thing I'm almost certain about is volatility should just continue to plunge. And 180-day volatility in Bitcoin is running around 80% annualized. The lowest ever was 41%. I think I mentioned this. That was October 2015. That's marked the beginning of the bull market. I think we're going to take that out potentially. Maybe, I don't know about the end of this year, but beginning early next year, take out new lows in volatility.
Well, there it is. New lows in volatility, more resemblance of gold, potentially an upward ceiling of 10 to 12,000. As usual, this thing has been packed with information. One of the shorter episodes, but one of the sweeter ones. And I want to thank you, Mike, for coming on the show again. Is there any final words you have for the Flood TV audience?
Thanks for having me, and I really appreciate what you do because I listen to every one of your programs, and I appreciate the education that you provide for us. So thank you.
Thank you, Mike. Well, I hope you guys enjoyed that. I know I certainly did. If you enjoyed it, please hit that like button. If you have a question for Mike or you want to keep the conversation going, please throw it in the comment section below and we can keep the chat going. As usual, I'm Elio Trades. You're watching FUD TV, and I'll see you very, very soon on the next episode.